At this moment, XRP is trading at $1.4735, positioned at the extreme apex of a macro triangular formation where structural pressure is reaching a breaking point. The overhead pressure is defined by this multi-year descending trendline, a structural ceiling originating from the $3.60 all-time high. Looking at the 1-hour view, we see immediate micropressure as aggressive buying volume strikes this historical resistance. This creates a state of extreme timeframe divergence. Short-term quantitative indicators are now moving in direct opposition to the daily structural trend. We will deconstruct these conflicting datasets to determine the likelihood of a high-velocity breakout. Navigating this environment requires synthesizing multi-timeframe data rather than reacting to isolated price movements. On the daily timeframe, the RSI sits at 64.71. While this suggests a neutral bullish state, the price action remains capped by the long-term trendline. The average directional index reveals the macro trend's underlying weakness, currently reading 11.82. Historically, an ADX below 20 indicates that a macro trend lacks the structural strength to maintain its direction. Daily volume data further supports this exhaustion, operating at only 71% of its historical average. This combination of heavy resistance and low participation often forces institutional algorithms into a passive neutral state. Standard technical analysis typically interprets these specific macro metrics as a signal to short the asset. However, focusing solely on macro exhaustion overlooks the liquidity buildup occurring on the micro level. Relying on daily metrics alone creates a significant blind spot regarding the momentum gathering in shorter timeframes. The 1-hour and 4-hour charts show a different reality, starting with a bullish MACD crossover. Liquidity has returned in force, with 1-hour volume surging to 162% above its moving average. Unlike the weak macro trend, the 1-hour ADX has spiked to 49.55. An ADX approaching 50 on this timeframe indicates a trend with high directional conviction. This momentum has pushed the 4-hour RSI to 72.37. In the most extreme indicator of strength, the 1-hour stochastic %K has reached 98.27. Price action has followed suit, breaching the upper Bollinger Bands. Conventional trading rules suggest that oscillators reaching these levels mandate an immediate mean reversion trade. This collision between macro exhaustion and micro intensity represents a volatile market anomaly where standard correction rules are often superseded by raw momentum. Standard assumptions that a stochastic reading of 98 guarantees a market top are often misplaced here. Applying generic oscillator rules to XRP ignores the asset's specific behavioral tendencies. Historical data reveals a recurring pattern. XRP often undergoes extended periods of flat accumulation, followed by sudden vertical expansions. The first phase is characterized by months of sideways movement, designed to exhaust retail patience and drain liquidity. This is followed by rapid vertical breakouts that move too quickly for overhead structural resistance to act as a meaningful break. These spikes consistently trigger only after RSI and stochastic indicators have reached extreme overbought levels. The asset frequently requires this level of internal momentum just to overcome its own accumulation inertia. The current 1-hour and 4-hour datasets share the same characteristics as those historical pre-breakout phases. Breaking the $1.47 resistance would signal the formal invalidation of the long-term descending trendline. Invalidation typically leads to a liquidation of short positions, which historically feeds into a rapid wave of market participation. This can result in a 20 to 30% price expansion within a single overnight session. Based on these recurring cycles, extreme overbought metrics serve as the necessary ignition sequence for a major structural shift. We can now evaluate the likelihood of specific outcomes over the next 72 hours based on this data confluence. A bullish outcome has a 60% probability. This requires sustained volume to clear the 1.4744 level, targeting 1.53 and 1.60 within 3 days. There is a 30% probability for a bearish rejection. If momentum fails at the trendline, a liquidity flush toward 1.36 becomes likely. A 10% probability remains for a neutral scenario, where price consolidates sideways between 1.42 and 1.47. Professional trading involves managing risk within these probability ranges, rather than relying on emotional bias. The trade parameters for a conservative long position involve an entry zone between 1.4225 and 1.4744. This zone is supported by the 9-period EMA, which provides a dynamic floor for price action. A stop loss at $1.40 maintains a strict 1-to-2 risk-reward ratio and provides a clear point of trade invalidation. To identify these specific structural shifts in the market exactly as they happen in real time, we utilize the GEM Intel Pro system. This AI-driven system is designed to process cross-chain data points in real time. You can access this technology for free via the pinned link below. If you find this analysis valuable, like the video and comment hype. Subscribe and hit the bell for daily updates. Join our community and register with our partner exchanges, Bybit and Binance, through the description links. This analysis is for educational purposes. All trading carries risk. Ensure you conduct independent research and manage your capital responsibly. Disciplined risk management and data-driven insights separate professional trading from speculation. We'll see you in the next analysis.